I feel like we should have swapped it over. I mean,
Oh, yeah.
that's not quite right, but that'll do nonetheless. Well, thank you all for being here. Welcome to our presentation today. I hope everyone's staying dry. Before I start, can I get a show of who likes filling out KYC? Oh,
Absolutely no one.
no one? No one likes KYC? Who trades on centralized exchanges? There's a lot more hands that should be going up. Who uses DeFi? OK, so I'm getting more DeFi than ZeFi. OK, so this is a very woke audience. I love to see that. So a lot of you guys have probably used some of these products. And I want to give some history on why I think this is relevant. I feel like a lot of presentations speak to FTX, Celsius, Voyager, BlockFi. For these projects or these companies, a lot of what they did was built off track record, trust, frankly, at some point. But at some stage, we stopped verifying, and we just trusted. And trust only works until it doesn't. So what I want to quickly talk about is why hasn't DEX volume grown in the way that it has? You'd imagine after FTX, after all these instances, that the chart would go from bottom left to top right. So this hasn't taken place. And I want to quickly step through why that's the case. I mean, if we look at 2020, for those who were around during the sort of 2020 DeFi summer vintage, this was the original DeFi summer. Uniswap took off, introduced the AMM, something that was quite novel, not really yet seen in DeFi, and I think that really pushed the volume. There was usage in Compound, Balancer, a lot of protocols that represented what we would call Gen 1. Terms like liquidity mining are probably familiar to some of you as well. But eventually, we return back to the norm. We go below 5%. And life continues. You might wonder, OK, what's the case? Why is DeFi not working? A lot of it comes down to cost. But then, again, in the next one, you see that we go up yet again. And it feels like, OK, maybe this time is the time for DeFi to shine. During this period, we see an alternative chain like Solana take off. Solana hits 260. It's euphoric. Everyone's singing Kumbaya. It's fantastic. But yet again, this retraces again until more recently in 2023. Can anyone tell me why, at this point, DeFi spiked again, very temporarily? No? No answers? This is when Binance got served by the SEC. During this moment, a lot of funds moved out of centralized exchanges. There were claims, whispers of insolvency from other exchanges. But ultimately, we retraced and went back down even further beyond the previous high. So you might start thinking, at this stage, why we keep coming and going. And the analogy I'm going to use is it's like a toxic relationship. You just keep coming back for what doesn't work, but somehow it just keeps bringing you back, even though you know it's not good for you. And we've seen again and again that centralized exchanges, centralized platforms have these points of failure that have completely wiped out large chunks of the industry. So for the user to keep coming back, there must be something seriously wrong with where DeFi is today. And you boil that down to two things. The user experience is just not there right now. If you are a new user, you connect your wallet for the first time, and you see these 12, 24 words, the last thing you want to do is to proceed and go through with it. You might wonder, why am I doing this? It's a lot easier with email. Patterns of behavior that are very foreign to a new user. That's not fun. And then secondarily, blockchain infrastructure is just slower at the end of the day. There are trade-offs. Recently, you might hear whispers that transactions don't land, even on faster networks like Solana. And if your orders, your transactions aren't feeling, why use it? Why use something that is not working the way it should be? So no matter how toxic your centralized exchange, your toxic partner may be, you keep going back because they give you what you want. But that said, I think this narrative is changing. Technology is catching up. We've moved from a phase where DeFi wasn't able to be supported initially to a time where all of a sudden we can start managing tens, hundreds, and eventually millions of users. And it's our vision to provide every trader with access to permissionless global access to these markets. And I want to let Cindy share a little bit about what that looks like for Drift as we move on to this age of DeFi.
Thank you, David, for telling us all about why centralized exchanges are really terrible. I'm here to paint a slightly more optimistic view on where we're going and what's possible with DeFi today. So let's shift gears a little bit and talk about us. You might be wondering, why are these guys up here? Who are they? Why are we qualified to talk about this? We are the founders of Drift. We're the largest perpetuals exchange on Solana. And we actually started just as traders, like you guys, on centralized exchanges, all the way in 2018. We started off running a prop fund where we were trading on centralized exchanges, running a bunch of basis arbitrage strategies. And we quickly realized as traders on the centralized exchanges that we didn't like KYC, we didn't like how arbitrary a lot of the actions on centralized exchanges were. For some reason, on KuCoin or OKX back in the day, on a bad day, sometimes our funds might just be frozen in transit and unable to be withdrawn. And there was no reason, no understanding of why. Clawbacks were very common back then. And understanding of what was going on underneath these exchanges were just non-existent. So we looked around for an alternative, and we're looking for a perps DEX and a DEX with a decentralized backend that we could actually trade on and use as traders, but it didn't exist. So we decided that this was a huge market opportunity. Perps are the biggest market in crypto, and derivatives are huge in TradFi. So we decided to take it upon us to build it up. Before we talk about Drift, I want to quickly touch on the history of decentralized exchanges and derivatives, and quickly speed through what has existed. Obviously, the founding members of Perps, BitMEX, started in 2017, which was a pretty monumental moment for crypto, as it allowed people to trade crypto assets now with leverage under a single instrument. So instead of futures where you have 5 different expiries and traders didn't understand what's going on, perpetual futures actually combine liquidity for all strikes in the futures chain into a single asset. And that was very monumental for crypto volumes. But unfortunately, a lot of these early contracts were margined in the crypto asset itself. There were not many markets available due to lack of liquidity. And so the next generation of exchanges built products that were more suitable for the trader audience. So it enabled flexible margin. It enabled a lot of new markets to pop up. So this was during the altcoin craze in 2019, where markets were popping up left and right. Now, where we're going from here is that we want to build a decentralized exchange that has all of these features in centralized exchange, flexible margin, not centralization, decentralization, with the flexibility of allowing as many markets as you want to trade. But why didn't this exist before? A lot of the reason and the history of decentralized exchanges started off with simplicity, because the underlying technology in L1 was simply too inflexible to allow for high-frequency trading and traders to actually bring prices and assets in line. And back in 2018, for instance, all you saw were P2P exchanges that could not support anything more than a swap with one single counterparty. In the 2018s, we saw AMM start popping up with Uniswap, where you had more peer-to-pool structures. You can trade against a pool of liquidity. But this still wasn't comparable to a centralized exchange experience, because what people really want was to trade against an order book that could allow you to settle at a price specificity that you want. But this has changed a lot in the last 2 years. Have you seen more L2s pop up, alt layer 1s such as Solana? And today, we're actually very happy to say that the technology to scale decentralized exchanges is here. And for the first time in the history of blockchain, we can actually build a lot of the features that you loved on centralized exchanges on a decentralized exchange. We call this the golden age of DeFi. We believe that a lot of the features are not here, and users don't need to use centralized exchanges anymore. So Drift is now the largest perpetuals exchange on Solana. You might be wondering what's the philosophy and why we built Drift the way we did. One, we wanted all assets to settle on a layer 1 because ultimately we don't believe in an L2 that has a centralized sequencer and that has very centralized data sets. We wanted to essentially inherit the security of an L1 with all the assets that are there. We wanted a fully permissionless setup that enables anyone to allow assets to be traded. This is something that you cannot do on centralized exchange today. If you want a meme coin to be added to an exchange, you go through numerous rounds of listings with Drift and some announcements that are coming up next. This is actually going to be very possible to get derivatives on day 1. And we wanted to build something that was ultimately censorship resistant. No one can tell you that suddenly your funds are gone. They're always on an open source, audited blockchain with a smart contract underlying. And given the hype around Solana this year, you might be wondering, why did we bet on Solana? And why did we choose to continue with Solana even throughout the bear market of 2022, 2023? There are a couple of core pillars that we care about. One, as we mentioned, is asset availability. Solana is home to NFTs, to DePIN assets, AI assets, gaming assets, and we want to be the home and the CME for all of these assets that are natively on-chain. This isn't really possible now on an isolated app chain, which is why we care a lot about being native to an ecosystem that cares a lot about its users. Secondly, the developer ecosystem in Solana has evolved to enable anybody to be able to deploy smart contracts, and we want to be a part of an ecosystem that is thriving and growing. Now let's take a quick look at how we've grown. If you look at the period between July to October of last year, we're pretty much around the same range. We're growing, but it doesn't look that explosive. We fast forward to October last year, it's been an insane amount of growth. A couple of reasons why this happened. One is that appetite for trading has started to come back. Volatility has come back, the narrative around Solana has come back, and now we've grown to be the biggest derivative stacks on Solana and one of the biggest in crypto. To gloss over the numbers a little bit, we just hit 30 B in total volume traded with our first 500 mil a day yesterday, which is proof that there is growing demand for people to start moving over centralized trading activities over to DeFi. We now also serve over 180,000 users, which, to us 5 years ago, joining crypto, we could never have imagined that a decentralized exchange could actually support this amount of users trading against each other. But this is not where it ends. This is still very far from the ultimate vision of us taking over centralized exchanges. We are, about 50 times away from being as big as the largest centralized exchanges today. So there's a lot of growth left. And I want to talk a little bit about, again, the philosophy around where we're going and why we managed to grow to this extent. A lot of the reason is thinking about it not as a single isolated decentralized app, but as a part of a bigger ecosystem. We see ourselves as the core infrastructure in a financial ecosystem that's ultimately open to everyone to participate in, with an underlying infrastructure layer that helps support fast trading on-chain, and an app layer on top of it that creates alternative access to front ends. For instance, a light mode, an app for normies to be able to trade, like a Robinhood. But everything settles back to the Drift exchange layer. And yeah, if you look at our focus on user experience and product, this is actually number one in our priorities. We want to make experiences magical. And by magical, we really mean you don't know that it's using crypto. So a lot of things like account abstraction, simplicity of putting trades on, having advanced limit orders, these things just weren't available in DeFi prior to this. Other than that, as we talk about the app layer, we believe that there's multiple distribution channels using product as the first step. And mobile is a very huge cornerstone in where we are today. We believe that anybody should be able to trade decentralized perps on their phones. in the subways everywhere. And we should also have alternative mechanisms to allow people who just want to stake to participate. And with that, I will transition it back to David to tell us and drop some alpha around what's next for us.
So if you're still listening intently at this stage, we think you deserve something, because it's been a pretty miserable few days, and for all you hardcore attendees, let's share something fun. So this is very fresh off the press. We're announcing our token. This governance token is to empower the traders. Ultimately, it's the trader that we think should be the owners of the exchange. It's the trader that knows best what they want. The trader should be able to determine what fees, what types of liquidation, what types of margin ratios that make the most sense in times of changing markets. So let's break this down a little bit. What does governance actually mean? It's one of those terms that are just thrown around, very empty, but I want to spend a bit of time talking about how we think about it. I mean, governance is not too dissimilar from corporate governance, the world I used to come from as a lawyer. We think about it in very similar ways, where certain functions should be delegated to certain groups. For instance, a security council represents essentially management, the team that governs the protocol upgrades, the implementation of parameters. We have a Realms DAO, which think of it as shareholders, where people are essentially able to vote on the Security Council, determine who management, the board look like, and then govern the day-to-day. And something new, innovative, that hasn't been seen before in Web3. And that's the introduction of Futaki DAO, where you're essentially incentivizing members to make the correct financial decisions in betting on certain products. And that already has attracted 50 or so developers to our ecosystem. Speaking on allocation, at the end of the day, this is a community-first project. It's all about everyone else. Us as contributors play the role of a steward in this ecosystem. So when we think about it, we're airdropping 10% to our community, the rest for future ecosystem development. We then think about protocol development, funding as well as rewarding strategic participants that have engaged with us over the years. There's total billion in supply, 150 mil, so 15% on distribution. I think it's really important that we step away from the previous narrative of Solana coins with very low float, high FTV. I think that's not a narrative that we're looking to embrace. It's something we want to rewrite. And speaking on the roadmap to decentralization, there are two core players in this, soon to be many. First is the role of labs. And labs is something that everyone is familiar with here. It's essentially the company as you know it, the core unit that develops the technology, the infrastructure. But I think more importantly, there's this other role that Foundation plays. The role of Foundation is not to be that of a HQ. It's not a secondary HQ that covers items outside of the purview of the first labs company. We like to think of the Foundation as a city with citizens who essentially power up this organization, they evangelize, and they bring to the table things that they would like to see and own in this ecosystem. So when we think about labs, going back to the previous discussion of Cindy's diagram, the Perpetuals Exchange is core to everything. We have the Keeper network that supports it. We have a validator that ensures that the stake-weighted quality of service is high, meaning that we can land more transactions than any of our competitors. But then on the consumer layer, on the app layer, thinking about spot trading, thinking about borrow lend. We are the only protocol that offers cross-collateral. No other Perpetuals DEX offers this today. And this just goes to show what's possible now that wasn't possible 5 years ago. And finally, the consumer experience to be that Robin Hood. But you'll also notice that there are 3 boxes that are grayed out from labs. And we think that these are functions that Foundation should look after. So Foundation is essentially bringing teams, products to the Drift ecosystem. And we've already seen this take place. We've seen teams build structured products of Basis from structured products on Basis. Basis is trading very high. And this team came to us and have built that independently of Drift. It is very separate. It's one thing that works very well within the Drift ecosystem, but more importantly, has a life outside of Drift on other DEXs. We are thinking about DeFi wallets and have a team building custom RPC infrastructure. There is, frankly, a lot that can and needs to be innovated on at this stage. So then, this brings me to probably the most exciting announcement of how we're thinking about better serving all of our ecosystem and our users. And without further ado, Cindy, I'll let you share what the future of Drift Layer looks like.
This is very early in the game, and I'm glad that you guys are all here today because we haven't revealed this anywhere else. We are interested in building infrastructure that truly works at scale for DeFi. And that means that, one, we do want to stay on an L1 like Solana. How do we manage congestion issues? How do we manage to ensure that our operations as an exchange can stay the same even throughout network volatility? As for us, hyper performance is extremely important. So one idea and the roadmap that we're rolling down is thinking about it as having restaked Drift and restaked Drift Sol to essentially validate parts of our current order book, and that keeping an order book completely on-chain while having it as a layer actually on top of the exchange and on top of the L1 rather than building an L2 ourselves. So we are doing active research into how we can continue to essentially leverage the security benefits of restaking and having our keeper network that hosts our order book to be held on a way that is continued to be performance for our exchange. And we want to quickly touch on the future and coming back to where we started, which was we don't want centralized exchanges to continue to be dominating 5 years from now. We think that the direction that we're going down is a very important and monumental path for crypto because we care a lot about building products that everyone here can use, that no one can be censored from, and that the world can continue to use without needing to KYC themselves or asking for permission.
So without further ado, I put up some hands. People said that there were more DeFi users than centralized exchange users. I'm glad that this is the case. And if this is a reflection of what's to come, this is a very positive sign. I think ultimately, there is still a lot more that needs to take place for, frankly, mums and dads to end up using platforms like Drift. Functions like Connect Wallet need to go. And I think with where infrastructure is going, we can soon get to the stage in supporting that. So for those who like KYC, welcome to the new future. Thank you.
Cindy, David, thank you so much for that. Honestly, congratulations on all of the traction that you've gotten so far. Oh, sure. Yeah, absolutely.
All right, so I think we got called back on call. Apparently, we have time for Q&A, so if anyone is interested in any of what was covered, please feel free to raise hands or not. Wow. Oh, yes, question at the back, sir. Going to run a mic to him.
Hello, thank you for the presentation. It was really awesome. I'm actually a Solana user, and I've been waiting for Drift for a couple of months now. I know that you guys have a point system. I saw that in one of the application or one of the slides that you showed. Is there an airdrop coming soon?
I mean, again, cannot confirm nor deny, but I hope sharing this here today should give you enough excitement and conviction. So I'm glad that someone is like a loyal user. It's good to see. Gentleman in the back.
I've got another question. So what's the prevention mechanism if I open like a position of 10x leverage, and so there must be a backing collateral if people keep opening 10x position, leverage position again and again and again. So what will the backing collateral? Because they're basically a pool, right? Who is backing these tokens and all. So how you guys are countering that? Most of the perpetual DEX like GMX, then Gain network, and all of these networks on EVM chain has their particular backing mechanism. Are you guys doing with the same thing where people will come and put a backing collateral when people are opening a lot of leverage position. Because my main point is basically when you are opening a leverage position in centralized exchange, most of this decentralized exchange, which are perps, if you keep opening like a leverage position like again and again and again, and if they are taking too much profit, then there is a protocol which will charge them fees if they are keep going to the market side. But if you are going against the market, then they will provide a particular fee for backing that leverage, right? So how you guys are countering that? You guys doing the same? If you guys are doing the same, then it's not exactly will give the experience as centralized exchange. But if you guys are doing something different, or do you have any counter for that?
Yeah, I'm glad you asked this question, and this might bore a lot of people, but we have a very interesting liquidity mechanism. It's three-pronged. So we have a peer-to-pool model similar to GMX, where anyone can stake tokens into a pool to support counterparty positions. So if I'm long and there's a pool, you guys will essentially go short and provide liquidity for that leverage. But secondly, we also have an order book, which we talked about a lot of the hyper performance and having market makers provide specific liquidity to supplement that liquidity. And on top of that, we have a liquidation mechanism that actually allows anybody to run a liquidator bot to take over a user's position when they're about to get liquidated. So if a person has 10x leverage, price moves 10%, essentially you're liquidated. What happens is that we have an open source liquidation system where anyone can come in, provide collateral for that particular position, and take over the position and sell it themselves. So because traders are providing extra collateral to support that liquidation, you have a buffer before the exchange has to liquidate users and has to socialize losses. So this has kept our system very safe through the last 2-3 years of operations. No more questions, but we can chat after. Thank you, everyone, so much.
Thank you very much for your question. We'll find you afterwards. Thank you all.